The first response is from the heart, not the head, and it's not a good rationale for managing your money. A sudden increase in volatility, an unexpected price movement, or the risk of an outside but market-related event, and a speculator's typical reaction to such a performance shock is intellectual paralysis. At a very basic level, evolution has rewarded the fearful and the pessimistic. This is fine if you're a caveman or a cavewoman living thousands of years ago. But this type of genetic programming can work against you in today's modern world of trading and investing. These are some of the quotes from the book EQ versus IQ by Mark Shipman.
IQ itself, you can improve your IQ because there are cheats and there's practice you can do to pass IQ tests and get better. EQ though, you can really improve, and it's about self-work. If we think of EQ as emotional intelligence, so through experience, through learning, we can improve our emotional responses. Once someone has a loss, they then try to grab that loss back. They try to make the losses back quicker. Well, that's an emotional response. That's not an intellectual response. So you can improve your EQ if you're aware of your faults and you work on them.
Welcome to the Trading the Markets podcast. I'm Jeremy Naylor. If you want to trade the markets, you have to understand that EQ or emotions are more important than IQ or intelligence. That's the main theme of the book EQ versus IQ. This is the third book written by the successful market trader Mark Shipman and covers what some regard as the most critical part of being a successful trader and successful speculation. That is the psychology of taking risk. Mark, who is an IG client, joins me now on today's podcast. Mark, it's a pleasure to have you on the pod today.
Nice
Welcome.
to see you, Jeremy. Thank you.
Now, the book is full of quotes, some of which are very well known, but I wanted to start by reading one of the quotes that you attribute to Bill Dries. Now, if he says that if all it took to beat the markets was a PhD in maths, there's be a lot of rich mathematicians out there highlighting the idea that you have to have intuition to be a successful trader, not just an education. How did you start out, presumably not knowing that emotions were more important than intelligence?
Yes, I did. I mean, I started out as a junior trader in the City of London in 1987, funnily enough, just around the time of the crash. So as basically a sandwich boy in the dealing room, I got to observe the dealers and traders dealing with the October crash. So automatically, whether it was subconsciously or consciously, I was aware that trading can be an emotional experience. And I think, obviously, we know winning and losing money is an emotional experience. You just have to go to a betting shop to see that. It was much later in my career, once I started trading, that I really realised the importance for myself in the psychology of trading as much as what you know. And my observations there were the people I worked with, in my opinion, were greater intelligence than I. They were PhDs from Cambridge and Oxford. I didn't even have an O-level in maths. And I could see that I was actually performing better than them. And when I really broke this down, which I did, I'm very analytical by nature, I actually saw that it was my responses to my losses versus their responses to their losses and winners that ultimately made the difference.
And I said you're an IG client. You asked a full-time trader, aren't you? I think I'm right in saying that most of your income comes through from speculating on the markets. Is that right?
That's true, yes. I mean, I think there's a quote, who I don't know who said this, but those that can do it, those that don't write books about it. So I'm hopefully trying to break the mould. I mean, I write books for primarily the reason of, if you want to learn a subject, it's great, you've got to teach it. I have periods in my trading where there are lulls and I preoccupy myself by writing, and that's where the books have come from. But I am a trader, so 95% of my money comes from trading, taking risk with IG.
And you're also involved with an organisation called the Personal Wealth Group, is that right?
Yes, PWG. It's a new group just starting, and our goal is to hopefully help new traders and existing traders with their basically their speculation and their investing. These are difficult times at the moment in the markets, and I think emotions are running ripe. So I was asked to join PWG. And I'm more than happy. They're a good organisation, and hopefully we can be a force for good, helping retail traders and investors.
Innate ability versus acquired ability. Can you teach EQ or emotional quotient?
You can. I'm probably living proof of that, but there's been other studies that actually prove that concept. IQ itself, you can improve your IQ because there are cheats and there's practice you can do to pass IQ tests and get better. EQ, though, you can really improve, and it's about self-work. If we think of EQ as emotional intelligence, so through experience, through learning, we can improve our emotional responses. When I work with people, I typically get them how to improve an emotional response to a loss is to put that loss in context with the rest of their career. You know, if the loss is obviously it's a large loss, we still have to put that in context. Are they still able to trade? And I think the problem is, I mean, in poker terminology, I think they call it going on tilt. But once someone has a loss, they then try to grab that loss back. They try to make the gains back, the losses back quicker. Well, that's an emotional response. That's not an intellectual response. So you can improve your EQ if you're aware of your faults and you work on them.
To what degree is your personal history going to influence your EQ? I'm thinking here when educating someone to trade, the added difficulty is, of course, you must take on someone's past. I'm a parent, as indeed I know are you too. And I know from my own personal experience that I wanted to give my children the best education I could offer. While this clearly was not a mistake, as a parent, should I have emphasised more about the EQ potential as well? Because I think possibly I might have missed out on that for my children's education.
I think yes. I think every parent should be aware just how much your EQ plays in your child's career, basically, or the rest of their lives. I think we can all imagine scenarios where two people go for an interview and they're almost equally qualified. With degrees or whatever they have. But if one is very amenable, very pleasant, the interviewer is probably thinking, which one could I work with? Could I work with this one? Does this one seem more calm, more stable, or more interesting? So even subconsciously, the person doing the interview of a prospective candidate for a job is relying on their EQ judgment of the other candidate. Interestingly as well, flipping EQ into education, and why I think it's tough and why trading itself is emotionally tough is our education. We are judged on our performance at school. If Johnny or Susanna takes a maths test and they get 10 out of 10, it's great. If they get 3 out of 10 or 4 out of 10, 5 out of 10, it's not so good. In the world of trading, you don't get 10 out of 10. You get 3, 4, 5 out of 10. Good traders, I pretty much operate on a just over half success rate if you're looking at win rates. But my winners are way bigger than my losers. But subconsciously, school programs us to always be striving to win. Therefore, the EQ and the emotions of dealing with loss, we haven't developed anyway any coping mechanism for losing. Because school has taught us we have to be right.
Yes, and also you say in the book that people prefer to be cautious. I guess this restricts our adventurous streak that we may or may not have in us from birth. And we know that naturally people recoil from pain and try to avoid failure, as you say. How is it that people do become successful traders then? What is it that they must overcome initially to win through in a world where we seem to be bombarded constantly by bad news and failure, which seems to be a part of the theme that's given to us by news outlets, for example?
Well, I think with regards to being a successful trader, and I can only speak for the people I've met in my career. I mean, I had my own hedge fund for many years before I then privately traded. And all the successful hedge fund managers I met, some of the well-known names that are pretty much just retiring now, guys that the public would never have heard of. To me, they all seem to possess a certain amount of self-confidence, but they didn't border on bravado. So there was an ability to deal with failure, I think. The bad news, the failure is there for everyone. I think anyone, and I'll be the first to confess as a trader, that I don't just wake up in the morning, turn the screens on and see how much money I've made. It just doesn't work like that. And for me, the key trait I've noticed through all successful traders is the ability to stay calm as possible during the bad periods. We all have losses, but the good traders, it's how they react to those losses and how they react to failure generally. In life, I've met traders who've had some horrific things happen in their upbringing, and that's obviously created a coping mechanism that has led them to become good traders, because they've been able to prove to themselves or they've developed over time a very good coping mechanism for something negative. It's going to hit you as a trader.
I want to pick up another aspect actually on that in your book. And I mean, we all know that trading the markets can be a very lonely job. Certainly if you're a sole trader by yourself, as you say, you wake up in the morning, you face your trading screen and whatever that presents to you. Steering the conversation briefly to a trading trading floor in a bank, and I want to pick up on one anecdote you point out in the book, which is interesting. In the book, you reference a trading floor manager, I believe was actually your direct line manager, who was consistently seen to be booking winning positions, but in fact he was harbouring a dark secret in this massive loss-making position, which I believe at some point was offsetting the gains made on the daily gains that he was booking. How important is it in a team to be seen to be winning? Does a team perform better if they have a person in charge who is winning, or perhaps maybe people perceived to be winning?
That's a very good question. I think in the case of this particular gentleman, his declaration of continually winning and almost ringing a bell every time he closed the winning trade was dangerous to the room, because he was harbouring a secret. Effectively, he had a very large losing position that he hid, and his little gains were pretty much sometimes just against that position. That fostered, I think, it was unhealthy, because everyone was trying to compete with him. When they'd known he was actually a loser, they wouldn't have tried that. It encouraged, I think, more risk-taking than the bank should have had. In terms of a dealing room generally, it's a bit of it's a strange environment, because we're a team, but we're not a team. Most people's bonuses are based on their own particular performance, and I'm sure plenty of traders on the quiet take pleasure if their colleague next to them actually posts a loser. So it's a very strange. You're taught basically to really look after yourself and your own positions, and yet you're spoken to sometimes by the treasury manager that you're a group and this bank moves forward together. It's a very alien environment, and there are plenty of guys that make money in large dealing rooms, sometimes obviously over the order flow they see. But for myself, I became a better trader when I pulled myself out of that environment, where I didn't need that animal spirit. I didn't have to compete with someone to be the alpha male. I'm quite a quiet person when I work, so it never suited me anyway. That
alpha male thing is very interesting. I think, again, you mentioned this in the book, is that the differences between people, and of course the big stark difference is how to compare women traders against men traders. Your experience, I think you started in 87, I think you say,
87.
in 1987.
Yeah.
And of course it was very much a male-dominated industry at that point. It's becoming less so now, although we do still hear of incidents that highlight the problems that occur within trading floors. Do you think that there is, or is there evidence to suggest that we are equal between men and women, or are women better at maybe perhaps possibly tuning into the emotional and therefore ultimately presumably becoming better traders as a result?
Well, my personal view is as a generality, and obviously we have to treat this as a generality, women are better as traders. My experience has proven that. And again, I think this lends itself to the EQ versus IQ argument, because I would say that men and women are equally blessed with high IQs, average IQs, low IQs. Where women, I think, seem to hold the upper hand in my own experience in trading, they are less likely to be emotionally affected by the losses. They're less likely to develop the bravado, the testosterone that a man has to bully this market back. I've been guilty of that in my early part of my career, and I actually almost observed myself doing it. I see it so much in new traders that I meet and consult and work with. There is this, especially male traders, there's this element that they have to get even. They have to get back. The market almost has a personality. Women tend to be more dispassionate. They tend to be able to take the market's role as just being the market, and they move on. And that's been the key difference. And that's why I would... with a gun to my head, I would favour, if I had two individuals and they were equal in every other way, I would probably hire the lady, because I just feel emotionally they're stronger.
One of the big things, of course, in trading is knowing when to cut your losses and knowing when to continue to run your profits. You mentioned the fact that you end up with a minority of profits on or rather trades that are profitable, but allowing those to run gives you the overall profit. You mentioned the Concord fallacy of sunk cost in the book. Be prepared to give up a trade no matter what effort you put in, rather than keep funding the losing trades. Why is it do we seem to want to continue to say, the markets are going to get my way in a moment, I'm going to keep funding this because it's going to be a good point to buy in, I've got to get it? But sometimes it doesn't happen. But we stick with a losing trade and cut our losses. What is it deeply embedded in our own emotional makeup that makes us do that?
I think with regards to the reluctance to accept a loss is a real tangible bottom line. It's in print in red that you've been wrong. And there are a lot of people that still go through life looking at their P&L thinking an unrealised loss is not a loss. It is. It's a loss on your P&L whether you close or open that position. And this, again, I think feeds back to the maths test, the 10 out of 10. We don't like to be wrong. We don't like to be proved wrong. And in many people's eyes, until that position is closed, they could be right or wrong still because the market could rebound on them. But what they're doing here is they're lacking the discipline to cut their losses, and they're allowing a small loss to become a big loss. It could ultimately affect their entire career. I think the driver for this, though, is the typical human trait of not wishing to appear wrong. And booking lots of little winners is satisfying because it's proof that we were right. And this isn't a game about being right or wrong. This is a game about making money. So you can be right a lot less than you're wrong and still make money. And that's the key most people miss. I think on a psychological level, this fear of being proved wrong destroys some people from trading.
I want to move on and take a look at hypnosis and the possible role that can play. I know you trained with the famous UK hypnotist Paul McKenna.
That's correct. Yeah.
And also Richard Bandler, I believe, a US
I studied NLP.
Psychologist. Now, Richard Bandler is famous for his coverage of something called NLP, neuro-linguistic programming. Does this help? I know you do in your professional career touch hypnotism. I won't go too much into that, but hypnotism as a concept, does it help traders? Can I be hypnotized into being a successful trader?
Well, I think what you can do, I mean, hypnotism itself is obviously inducing a trance into someone so that you can create a visualization in their head. A stage hypnotist would turn someone into Elvis or something like that. A hypnotherapist would obviously be dealing with phobias or anxiety. What traders can do is what sportsmen do, which is positive visualization. So these are all lovely buzzwords, all around the same subject. It's been proven, and sports psychologists now have a very important role in any sport, whether it's ice hockey, downhill skiing, football, 100-meter running. The visualization aspect of seeing yourself being successful is enormously powerful. It helps you quantify how that success may come. In sport, we can see how this can really be helpful. And there's a number of books that have been written on the subject of establishing a successful process in your mind, then following that process in action when you play that sport. Within trading, I think it's the same thing. I think you have to visualize yourself being successful, but you have to quantify that in how is that going to happen. Just to wish yourself success is not going to create it. But what you should do, and what I encourage everyone to do, and this flips back to NLP. NLP was developed by Bandler and Grindler as a form of modelling of a famous hypnotist called Milton Erickson, who was exceptional, probably the greatest hypnotist that ever lived, hypnotherapist. They wanted, as he was getting old, they wanted to replicate some of the bits he did, see if they could find a common denominator that then they could teach other people. And Bandler famously did this with snipers in the American Army. He studied the top 20 snipers in the American Army, asked them all what they do. Do you hold your breath when you do this? Do you exhale? Then they found a model. They found a certain consistency. They all didn't do the same thing, but there was enough of a theme that they could take that and they would teach squaddies. They didn't turn the squaddies into snipers, but they improved every single one of them as a shooter. And that's where I think this fits into trading. You can model good traders. If you can find a trader that you respect, Market Wizard books and things of that have been written years and years and years ago. In fact, for me, one of my epiphanies was to read the first Market Wizards book, because I could see these interviews with famous traders, and I picked the ones that I related to, the more analytical, the more longer-term traders, and I took little bits and pieces from that, and I almost created my model. What I thought a good trader would be. And then, yes, I used, although at the time I didn't know it was positive visualization, but I started to factor that in my own behaviour, and my trading just improved immediately.
Behaviour and language.
Yes.
Because language is important too, isn't it, as you say?
It's enormously important. I mean, the way you can always tell something about the way someone talks, about their whole personality. Again, it's a hypnotist and hypnotherapist and just observationally, we all do this on a subconscious level. You can warm to someone or not, and it's often based on their body language and how they speak. And you can always tell whether someone is going to be a successful trader, I think, by the way they speak. If it's this, bland statements that I'm going to do this and I'm going to do that, I see a lack of respect for the market, and I don't think that guy or lady will succeed. If I see a humbleness, but with a plan, then for me, I often can tell from that language that humbleness that's coming through, yet with a structure, I think this person could make it.
You tell the interesting story in the book about the trader that wants to find someone else that agrees with his view on his particular trade, and he'll go around a trading floor until he finds someone that he agrees with. I think this is called confirmation bias, I believe, isn't it? How important is it to speak to people that are either in agreement or not with you? As a sole trader, someone that wakes up in the morning and looks at their screen and decides what to do, is it important that they do speak or do not speak to other people?
I think it's a very interesting, very good question, because confirmation bias, I think, can sabotage a very good trader. I think the problem with it is, and you allude to the story, and it was very early in my career in Australian Bank, and it was the dealing room was like a football pitch size, so I could observe this going on. This guy was I think $1 position from memory. He would come around asking even me, and I was literally just promoted from sandwiches and teas and coffees, even asked my view on the dollar. I heard the guy next to me say something, so I just followed him. So this guy then moves on again. I suddenly see him stop, so I have to be nosy, and I've wandered down, and he's finally found a dollar bull. And he will then spend the next half an hour discussing why the dollar has to go up. The problem with this is, and how I see this manifest itself now, funny enough, bringing us right up to 2020, is Twitter or some of these forums. And I know of a particular guy who, we've weeded him off of this now, will only follow people on Twitter that post views that match his own positions. So if he's bearish or bullish the stock market, he will literally, as soon as he sees someone post a negative tweet and he's bullish, he will delete that account or block that account until things change. Why I think this is not good for a trader is one of the hardest things to do as a trader when it's your own money and you're sitting there on your own making those decisions. You have to be everything. You have to be the trader, you have to be the risk manager, you have to be the treasury manager, you have to have all these roles. And in a proper dealing room or a hedge fund or any proprietary trading house, now and again, it's good to have someone question your viewpoint, because that always forces you to re-establish why you've got that position in the first place. And I think if you can't quantify it in whatever you use, whether you're a technical trader or a fundamental trader, if you're unable to quantify why you're holding that position, then you should revisit that position, whether you should hold it. Seeking confirmation is not going to do that. If anything, you should seek the opposite view. You should be challenged, ask someone to challenge. And providing you give an answer that in your own head still fits your own strategy, then you're being true to yourself. And the problem with confirmation bias is not that. They literally wander around until they find someone that supports their view. It doesn't help their position.
And of course, it goes back to this thing about being the alpha male, I suppose, in a trading floor, as if you are someone that has a more vocal opinion and would appear to be in a better position than other people, people will follow that wrong view. Oh,
yes, I've seen that so many times. And funnily enough, you see it also nowadays with newsletter writers and commentators on social media. Some have bigger followings than others, and their viewpoint will carry a greater weight. I always love, and I refer back to one of my heroes, sadly, who passed away a year or so ago, David Fuller, the late David Fuller. He always used to open his seminars by saying, right, we have two types of people. We have good guessers and we have bad guessers. And I think that's still true. An educated guess is what we strive for. But I think you need to maintain that humble approach that we are still guessing. None of us know where any of these markets are going, no matter who they are or what. Paul Tudor-Jones, enormously successful hedge fund manager, who I had the pleasure of managing money for as well. He's not right all the time by his own admission. Yet he says something, it's posted everywhere and people follow it.
One of the nice things I like about your book is your honesty, because you also tell the wonderful story of the time you read a chart back to front or round the wrong way.
It was upside down.
Upside down.
Yes, it was.
But you still won against the market or the floor trend.
Yes, yeah.
What happened there?
Well, those that don't believe in charts will probably see that as confirmation that charts are useless. What actually happened was, this was very new in my career, and I just worked out really for myself that I didn't have the intellect to understand fundamental data enough to put it into positions. So I discovered charts, and I bought my first book, read it from cover to cover, about 400 pages, all these different chart patterns, and then spoke to an analyst at the futures broker who I was allowed to trade one lots for the bank. This was my big deal. And I was relying on him as well. And I'd always phone him up and say, Sam, what do you think of this? I think this is breaking out and this, that and the other. And he'd encourage me or he'd dissuade me. And I was learning osmosis really from him.
Sure.
And then one day I saw this chart on which I always print my charts off from my analysis. And I looked at that and thought, wow, that's that's breaking up. So so I bought, I think it was Eurodollars, I think it was short sterling. So I bought my one lot, and then I thought, I just need to get confirmation. I'm going to speak to Sam. He was at lunch, where I ran it. And then I got hold of him in the afternoon. I explained what it was, and I said what the market was, and he's called it up on his screen, and he just couldn't see it. He said, I can't see why you've done that. He said, you should be doing the opposite. I went, well, I've done this. He said, well, what contract month is it? So as I pulled all my papers away, I've seen the chart is upside down. And what I'm actually looking at a breakout was what happened 4 months ago when the market was going the other way. So I said this to him. So he said, book the profit now, which I did. And he said, well, there's a lesson learned. Yeah. So it probably tells you more about my learning curve as a trader at the time, and the mere fact that I just got lucky, I suppose, than anything else. But it's an interesting story. Again, you can do all the wrong things and make money. You can do all the right things and lose money. And I think that's one of the biggest things that can sabotage our EQ, IQ, and that's why EQ is so important. Again, it's called random reinforcement. So you can do everything right, you can select the trade right, the market, liquidity, the charts can be there, and the market will just do something, or Elon Musk may say something, or Donald Trump may say something, and the markets will react in a certain way. And yet you'll go down the pub, you'll be telling someone how horrible this is all, and they'll go, oh, well, I did that, and I doubled down, and I doubled down again, and it backed up on me, and I made money. Now that guy, I think, or woman, has done all the wrong things, because ultimately that will kill you, averaging a loser, and made money. I've done all the right things and lost money. And there's not many careers that anyone undertakes where you have this much, variance, they would call it in poker, random reinforcement. A brain surgeon has to follow a particular rule, an electrician does, a car mechanic does. Traders, it's different. We can do all the right things and still get the wrong answer. And we have to deal with that emotionally, because the wrong answer is not just the wrong answer, it's loss, and we're losing our money. Which is emotionally stressful. Yeah.
I want to end on a well, in some respect, a positive, because I want to talk about profits and being a successful trader. Once you've arrived and you've understood this, you conquered this EQ versus IQ. And I'm reading a paragraph in your book that you say that profits can stop you sleeping as much as losses. Now, I was drawn to that because one assumes, it's like owning money. If you have money, you think all your worldly problems go away, but in fact, all they do is they transfer the questions you have about society, life, or whatever it is, your position, into a different sort of stratosphere, if you like. Profits can stop you sleeping as much as losses. That's a bit sad, really.
Yes, yeah. I'm sure that's why some people don't go for profits. I don't know. For me, it's an observation on myself as much as anything, and it's a lot of this. Most of my career, and probably the last 7 or 8 years, I was what we would call a trend follower. Now, a trend follower operates by trying to basically anticipate trends and climb aboard and run that trend for as long as possible. Typically, that strategy doesn't have a high strike rate. So you can spend many, many months losing money, then all of a sudden you start to make money in a trade. And the key is, of course, again, being a good guesser or a bad guesser, we don't know how long that trend's going to last. And I always found personally that if I had a losing trade, I could take the loss. My stop loss would be in, the breakout would be false, the market would come back, I'd take my loss, I'd wipe my mouth and I'd move on. And although I had a strategy for taking profits, because inherently, I say I was greedy, but I just wanted to make the most out of that trade as possible, sometimes I had trades that and I had to give that market enough room for that trend to whip a bit before going higher. I could see where my trailing stop was, and I could see where the P&L was at this moment, mark to market, and it was that fear of giving back that loss that would be a loss, giving back that profit that used to keep me awake at night. I've always slept like a baby when I've lost money. When I'm making really large amounts of money, I used to struggle. Some of it was excitement, and some of it was fear of giving back this lottery-style win. I suffer less with that now because I'm more of an options trader. My wins aren't so big, but they're more often. So, and the reason I've moved into options, they're enormously forgiving as well as an instrument, but actually it's to solve that problem of me dealing with profits. So I've identified I have a fault. It is a massive psychological fault in my system that I really struggle to process a good large profit. So I now trade in a different way. My profits are net, they're just as high, but they're broken into lots of smaller gains that are more manageable.
So do you have many trades open at once, talking about your attitude to trading and how you go about it.
Yes, I mean, my portfolio is typically divided. This is a personal call, but I divide my portfolio into about 20 positions, 20 net directional positions. So I can, within the options environment, you can actually obviously have a strangle where you have risk on both sides. I would net that out as one position. So I think between 20 and 30 positions maximum.
Okay. Well, look, it's fascinating talking to you. Thanks indeed for coming in, talking about your book, your third book this was, isn't it? EQ versus IQ. That's Mark Shipman, a trader of the markets who continues, as we've just been hearing, to trade, and it does so profitably. But he comes across these issues that we've been talking about and this big debate about emotion versus intelligence and whether or not being a trader, good trader, is something you can either acquire or if it's something that's innately inbred into you as a young child. That's Mark Shipman joining us there, the author of EQ versus IQ.